Good afternoon, everyone. In today's video, I'd like to show you the easiest way, in my opinion, to identify a trending day before it actually sets up. Especially if you find things like reading the market internals, trying to keep track of the tick, the advanced decline spread, and how these values change over the course of the day is a little too confusing or overwhelming for you, I think you'll find that this approach is much easier and cleaner. It's as easy as reading our chart bubble right here, which automatically plots, so there's really zero work involved in your end in terms of identifying this trending day. Now, once this bubble plots, that's our heads up that we should expect a trending day in the case of the S&P futures. That's what we have plotted here. And you have that notification at 7 a.m. So this is 30 minutes after the market opens. That's where you can position yourself to take advantage of this opportunity where you're really looking for higher highs throughout the rest of the day and at least some sort of a trending move at the very minimum hitting the next hour's volatility box target lines, right? That's your bare minimum target, and you can start to use that to scale in or out of these positions. Now, because you'd like to give it a little bit more room, that's where I've mentioned this before, but I'll mention it again. You can start to use things like options, where you use out of the money options with 0 days to expiration. So these really what are considered to be high risk plays, but you have this high probability setup that really supports this thesis. So you can find really cheap options here, especially if you did watch the option tutorial of the weekend. I gave some good ideas in a script in which you can identify some of these cheap ones, or you can use even the micro futures if you don't mind that additional risk, where you've given it a good chunk of room, but you're looking to see really how high is high. So now from our point of entry, if we continue to see what actually happens the rest of the day in the S&P futures, we have one pullback, which if you did run the fib retracements, happen to be the exact swing high to swing low. If you project that from this swing high, you had the wick touch that swing low before we continue to bounce from there. So I thought that was interesting. Whether or not you used it is completely up to you, right? The trade is valid as of this break right here. The 7 a.m. once this bubble plots, that's your entry to get in. Now we're looking to see how high is high, and I mentioned that the target lines end up becoming good places that you're looking for places to take off contracts. The first time we hit our target line is into a zone in that 9 to 10 a.m. hour Pacific, after which the S&P's already made a really nice move up higher. If you use the fibs, that also gave you some good target zones. And if you continue to just see how high is high, the S&P continued to make a move of close to 2.8% from our point of entry into the rest of the day, right? 2.7, 2.8%, which this was a really powerful way to get into a day trade opportunity using some very low risk methods. And you didn't really have to try and sit there and understand the internals. You didn't have to keep track of the tick. You didn't have to try and see how many stocks are increasing versus decreasing. But now if you do have that knowledge, I think if you start to layer that on, that starts to help you really figure out which pullbacks into these trends you'd like to buy and use things like plus 1000 tick readings to help you support this thesis. If you use something as simple as the market pulse, that gives you plenty of opportunities to just keep things clean. You have one pullback, you have another pullback, you had another pullback, but this time into an edge, so drastically less appealing. You had another pullback before really which you start to have less and less time for follow through, and you see that the S&P is already taken off a good percentage from that initial sign that we had, which was at 7 a.m. Pacific. Now, if I just quickly zoom this out just to give you an idea of how many times the signal plots, so we'll go to something like a 30-minute, and maybe we'll go to a 30-day chart just to see how many times we saw this bubble over the past 30 days. Here, it should be fairly easy to see. We had a trending up bubble, which was today. We had a trending down bubble on Friday, after which we had a nice puke down lower in the S&P. You had a trending up bubble earlier, after which, again, the S&P continued to rally, not just one day, but this ended up giving you a nice swing trade position. And then if we keep going back here, see if we had any other opportunities. We had another trending up day. Again, this was before the market even opens, after which point you saw that the markets continued to rally a good percentage. And then if we go back some more, that was about it for 30 days. So we had 1, 2, 3, and 4 opportunities. So it doesn't happen too often, but whenever it does happen, you know that this gives you that heads up that you should expect a trending day. You can buy pullbacks. You can use your internals, especially if you do have good knowledge, and start to layer them on to start to know to focus on the likelihood of a trending day before it actually sets up. And you can apply this for across a broad spectrum of markets, right? You can use the Dow, you can use the Russell, you can use the NASDAQ, so on and so forth. We support this with all 9 futures markets, and it's on the aggressive model. But you see, like on the Dow, you had, again, another likely trending up bubble. The Dow continues to rally from that point. Likely trending down bubble on Friday, and you had a puke down lower. Another trending up bubble, and just the eyeball test in itself should give you the notification that, hey, the markets do continue to trend up for multiple days after the point of entry, for those of you that are wondering how to find some swing trade opportunities using the hourly models. All right, hope this video helped. Went a little bit over than I was hoping for there, but hopefully at least looking at some of these charts and historical data helps to give you confidence in the idea of using the likely trending up or down bubbles to give you a heads up into a potentially trending day. All right, take care, good luck trading, and we'll see you in the next